Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Great to have your company here at AusBiz. Let's take a look at what's happened overnight. The plan for greater government spending in Germany sent European stocks higher. However, on Wall Street, stocks fell as investors opted for caution ahead of a monetary policy decision from the Federal Reserve tomorrow. Sentiment was also weighed down by inflation concerns, with US import prices unexpectedly rising in February. Growth stocks were among the hardest hit, with communication services the worst performing of the S&P sectors. Alphabet fell after the company said it would buy Wiz for about $32 billion in its biggest deal, as the Google parent doubles down on cybersecurity. Nvidia declined, with the company expecting to reveal details of its latest AI chip at its annual software developer conference. Tesla shares slumped again after broker RBC trimmed its price target for the EV maker, flagging the company is losing market share in China and Europe. And Meta has erased all the gains it made since the beginning of the year, with it having climbed nearly 26% in 2025. Well, geopolitical tensions have eased after Russia announced that President Vladimir Putin has agreed to a proposal from US President Donald Trump to stop targeting Ukrainian energy targets for the next 30 days. Well, in the US, a strong rebound in single-family housing starts and robust industrial output data provided some reassurance that the US economy is not in danger of imminent recession. All eyes, though, will be on the Fed tomorrow when it releases its latest policy statement, with expectations it will keep interest rates unchanged. The US two-year Treasury yield little changed at 4.06%, while the 10-year fell to 4.27%. Markets are pricing in no chance of a cut to the Fed funds rate tomorrow, but a 70% chance by June. The US dollar index down slightly, while the euro has risen as the German parliament approved a debt reform package to boost Europe's biggest economy. The Aussie trading down at 63.6 US cents, and Bitcoin remaining under pressure, trading at around 82,000 US dollars. Oil prices have fallen further as US President Donald Trump and Russian President Vladimir Putin discuss moves to end the 3-year war in Ukraine, which could result in a possible easing of sanctions on Russian fuel exports. Brent futures down around 0.7% to $70 a barrel. Copper is up more than 1%. Iron ore up slightly to 103 US dollars a tonne. And gold has jumped more than 1% to a fresh record high of $3,034 an ounce. So let's get across what we're seeing, particularly from a US market perspective. John Blank joining us from Zacks Investment Research. John, welcome back. Good to see you. What are we seeing through the lens of the investor at the moment, as we still consider what we're hearing from Donald Trump in terms of those tariffs, fears perhaps of a US recession, and then, of course, ahead of the Fed decision?
Yeah, Andrew, I took a look at the summary of economic forecasters' projections out of the Philly Fed, which is our summary of all the respected economists in the United States. It's still a 15% chance of a recession in Q2, and it's a 20% chance of a recession in Q3. So if the market is correctly pricing a recession now, and it might be, then it's probably out in Q4, and I think that's probably where we should be looking for it. Well, we got 6 months more to see if this president settles down into a routine that's more amenable to the markets and to the economy or not. And just to give you a perspective, Andrew, I look back at history from 1930 to the present, and there have been 27 corrections, of which we're now in one. And there were, in that same period, somewhere like 12 to 13 recessions. So the market gets these calls right, 40 to 50% of the time. And I think that's probably, in lieu of the president's chaos and his penchant for it, that's probably the probability out there in Q4.
John, what is it that's likely to tip the economy into recession?
I think it will be the markets pricing down things that then cause the executive class across the corporations to start to buckle down, batten down and start firing people. I think the Doge thing, we got news today, is now being declared unconstitutional. I'm hoping that gets put to bed. But I think that the penchant for chaos, the penchant for creating emergencies by this government, at some point in time, if it keeps taking the market down, it's going to start hitting corporate sentiment, and then they're going to start firing people. And it's when the private sector starts firing people, I'm going to start worrying.
I see you reference Reuters' 5 world market themes. That number one is a supposed new world order, given what Donald Trump has afoot at the moment. What are the potential risks that are developing there?
Andrew, one of the most fascinating things right now is actually in the FX markets with the Canadian dollar and the US dollar. That typically trades around 127 to 130. And as a result of just his rhetoric to Canada, it's now at 144. So the Canadian dollar is reflective of something no one would ever have expected, which is there's acrimony between us and Canada, and that would push Canada into the European Union. And I wouldn't be surprised if this carries on and that happens. And then what happens with the United States when we have a hostile, border on both sides of this country? That's a very unwelcome idea. But the currency market is starting to price in some of it, Andrew.
Yeah, in fact, we've seen the newly elected leader of Canada, Mark Carney, make those representations to Europe, calling Canada the most European of non-European nations.
Yeah, that's it. I mean, it's preposterous that we're in this situation, but this is what happens when you want an administration on, creating fear and get attention by doing it. So the only thing we can hope here is that, basically Lutnick, I think he's the Commerce Secretary, has been talking to Canada and getting the flip down on these tariffs. So the other thing that can happen here is after Doge gets put to bed, that the government agencies and the government appointments in the U.S. government, in the administration, start to act stronger and get their legs. They're all new. So if they get their legs and they start pushing back and he starts listening to them, that's probably the best case scenario we can have where we can put all this to bed. And that's kind of what I'm hoping for.
So do you feel as though those checks and balances are still in place to curb President Trump's power?
Well, the only checks and balances we're seeing that are any effective is the judiciary. And they are, getting the litigation to the judiciary, and the judiciary is, wise to the game. So, issuing executive orders and creating emergencies is the president's, play. And the judiciaries know what's up. And as also the attorney generals around the country. I mean, Andrew, every Sunday night I get a bulletin from the California Attorney General that tells us, before the markets open, for the state runs on Monday, who we're going to sue and what we're going to do and how the other suits are looking. So the new news you get at the state level in the United States, in a place like California, is what the Attorney General is going to sue. And this is absurd, but this is what you do when you've got a need for immediate daily checks and balances with a government like this.
Now, of course, amidst this turmoil and chaos, we have seen equities come off significantly. John, where are you looking for buying opportunity at the moment?
Well, Andrew, I think you got to look at Chinese stocks a little bit. I think, you've got a story there in a momentum trade that looks pretty good. You get valuations that are pretty good. So I like big tech China right now. JD.com is a name I like. I think Baba's going to get a play. But here's JD, and that's a chart that, you got to like that chart. You get a higher high, almost 45 or 50, a couple of months ago. Now we're back to just over 40 on this chart. A's for value and A's for growth. And you got $100 share price back there in 2021 when it ran well. So, look at all those green arrows. This is a company that's doing nothing but the right things in its domestic market. And you look at those annual estimate revision lines, all heading up in the right direction out 25, 26. The market's caught on to this. And there seems to be more trust in the Xi administration now that he's shown, himself sitting down with, people like Jack Ma and stuff. So this is a stock I like. I think, people should take a look at these big cap names that are trending right. And this is one I like, JD.com.
Well, another one on your list is Coinbase, the cryptocurrency exchange platform. Interesting, of course, given what we're seeing in the crypto space. A lot of pressure being felt there, perhaps some disappointment in that Donald Trump hasn't followed through with his promises.
Yeah, I mean, he may still. He's got he only been in this administration for 2 months, Andrew, believe it or not. So, look at this type of stock is really incredible. I got a stock market beta 3.7. 3.7. So it's whippy, super whippy. Last earnings surprise was 75%. Estimate revisions that have gone up 200% in the first quarter, 170% in the second quarter, and 108% for the year overall. So what you get here is just, it's almost like another alternative reality for this coin operator. The downside, of course, as we all know, we're down in the 80,000 area with Bitcoin itself. We lost 20% from the highs, but you got to wonder, if the real play here is in these exchange operators who make money regardless. And so ticker COYN is coming up to my list. It's the number one ranked pick right now. And, you get a pullback to basically, I'm looking at 180 and our target price is 260, Andrew.
And the third one on your list, Robinhood, the share trading platform. What are you seeing there, John?
Yeah, look at the chart here, Andrew. This is amazing. I mean, look at the pullback from the high 60s to 40 over the last few weeks. I mean, just an astonishing change in sentiment. But, if you look at the estimate revision, Andrew, super solid recovery of this company in the last 2-3 years. So got to like a name like this. Got 25 million subscribers from the old shutdown period. You can look back on the chart there. You can see, the IPO'd in 2021. This wasn't even a public company, even before COVID. So, but it kind of got forgotten, and it started to turn itself around here about a year ago. So I don't really like the big pullback here, but they're at some level of support in the 40s, and I think you gotta just maybe put this name on your watch list if you see it kind of stabilize for a few weeks. It might be a trade that starts to work again.
John, always great to get your perspective from Zacks Investment Research. Thanks for joining us.
You bet, Andrew.
Let's turn our attention to what's going on locally. We are expecting a negative start. SPY futures off 0.2%, reflecting what we have seen, particularly on the US market overnight. Stay with us. We're going to get right across it in just a couple of minutes' time.